Earnings season is about to kick into high gear, and this week, the stakes are gigantic. We're talking multi-billion-dollar market caps on the line, with nearly $1.23 trillion in shareholder value hanging in the balance. The question on everyone's mind, which way will the tide turn? Will we see a boost to the $7.49 billion in expected quarterly profits, or a dismal disappointment? It all comes down to one moment, the one that decides the week. One announcement, after the close on Wednesday, has the potential to make or break the market's mood. The anticipation is palpable, and we're just getting started. Welcome to the week ahead, where the market mood is a mixed bag of caution and curiosity. We've got a workforce that's feeling worn down, with people dropping out and not looking for new jobs, a trend that's leaving economists scratching their heads. The big question is, what's driving this exodus? Is it a sign of a larger issue, or just a temporary blip on the radar? Meanwhile, the AI landscape is shifting rapidly, with the US lead over China all but gone. That's a significant development, with implications that stretch far beyond the tech sector. And speaking of significant, have you checked the price of a flight lately? It's no secret that air travel has gotten expensive, with some tickets costing upwards of $1,200 or more for a single trip. The reason? A combination of high demand and limited supply, with airlines struggling to keep up. But what about the dollar? It just logged its worst week in over 3 months, amid doubts about the Fed's next move. That's a $120 billion question, if you will. Indian companies, meanwhile, are planning fresh price hikes, which could test the inflation outlook and have a ripple effect on the global economy. And then there's the AI giant Databricks, valued at a whopping $38 billion, with investors eager to get in on the action. Wallstreet is offering pre-IPO access, but what does that mean for the average investor? As we head into the week ahead, one big question hangs over the market. Can the economy avoid a downturn, or are we just delaying the inevitable? With so many factors at play, it's hard to say for sure. But one thing's certain, the next few days will be crucial in shaping the market's trajectory. So, buckle up and let's dive in. Tuesday's earnings are all about energy, with Marathon Petroleum Corp kicking things off before the open. Can they live up to that whopping $42.5 billion revenue estimate and impress with $13.86 earnings per share? One thing to watch, how their refining margins hold up. Meanwhile, Energy Transfer LP is also set to report before the open, with a relatively modest 39 cents earnings per share estimate on $29.1 billion in revenue. The key will be whether they can demonstrate some cost discipline. In retail, Cisco Corp is serving up an estimated $22.2 billion in revenue and $1.53 earnings per share, but the real question is, can they keep their food distribution costs in check? Over in food products, Archer Daniels Midland Co. is looking at $22.1 billion in revenue and $1.46 earnings per share. Will they get a boost from commodity prices? And in machinery, Caterpillar Inc. is expected to haul in $19.5 billion in revenue with $6.26 earnings per share. The big thing to watch is how their global sales are faring, especially in Asia. With estimates like $42.50 billion and $13.86 per share on the table, these reports are going to be closely watched, and $7.49 billion is the difference between Marathon Petroleum's estimated revenue and Caterpillar's, a reminder of the vastly different scales at play here. Wednesday's earnings parade is all about health, energy, and a dash of magic, courtesy of Disney. Let's start with the healthcare crew. McKesson Corp, reporting after the close, needs to show it can keep pace with its estimated $104.8 billion in revenue and $9.63 in EPS. The question is, can it sustain its growth momentum? Meanwhile, CVS Health Corp, with its $101.1 billion in estimated revenue and $1.87 in EPS, reports before the open, and we're watching to see how its pharmacy business holds up against rising competition. Senkara Inc., another early bird, is expected to bring in $85.2 billion in revenue and $4.39 in EPS. Can it balance its books while expanding its services? Phillips 66, the energy player, reports before the open with estimated revenue of $44.2 billion and EPS of $7.51. Will its numbers reflect the recent volatility in oil prices? Walt Disney Co., the media giant, is expected to post $25.7 billion in revenue and $1.88 in EPS. All eyes are on its streaming service growth. Eli Lilly and Co., with estimated revenue of $20.9 billion and EPS of $6.07, needs to demonstrate its pharmaceutical pipeline is strong. Lastly, MetLife Inc., reporting after the close, is anticipated to show $19.9 billion in revenue and $2.32 in EPS. We're looking for signs of improvement in its underwriting business. It's a packed day, with each company facing unique challenges. Who will rise to the occasion? This week, we're diving into the heart of earnings season, with a slew of heavy hitters set to report. McKesson Corp and CVS Health Corp are on deck, giving us a glimpse into the healthcare sector's performance. But let's not forget about the energy players. Phillips 66, Marathon Petroleum Corp., and Energy Transfer LP are all set to chime in. And if that's not enough, we've got Walt Disney Co., Cisco Corp., Archer Daniels Midland Co., Eli Lilly and Co., MetLife Inc., and Caterpillar Inc. all reporting. The bull case is that these companies will deliver solid earnings, boosting investor confidence and pushing the market higher. After all, a strong earnings season can be a powerful catalyst for a rally. On the other hand, the bear case is that these companies will disappoint, citing inflationary pressures, supply chain issues, and a slowing economy. If that happens, we could see a significant pullback. So, what's the real risk here? It's not just about the earnings themselves, but about the guidance these companies provide. If they're pessimistic about the future, that could spook investors and send the market tumbling. Take Eli Lilly and Co., for example. If they come in strong, that could be a boon for the healthcare sector. But if they miss, that could have a ripple effect throughout the market. And let's not forget about Caterpillar Inc. As a bellwether for the industrial sector, their report could have significant implications for the broader economy. The stakes are high, with $7.49 billion in quarterly revenue on the line for Walt Disney Co. and $2.95 billion for Archer Daniels Midland Company. So, will we see a rally or a pullback? One thing's for sure, this week's earnings will be a wild ride. So, what's the main event this week? It all comes down to one moment: McKesson Corp's earnings dropping like a bombshell on Wednesday after the close. Why should you care? Because this healthcare giant's report will give us a snapshot of the sector's health, and its $230 billion market cap means the ripples will spread far. This isn't just about McKesson, it's about the entire pharmaceutical supply chain. Will they beat estimates or leave us with a bitter pill to swallow? And that's a wrap. What a week ahead. McKesson Corp's earnings are coming, CVS Health Corp is making big moves, and Energy Transfer LP's pipeline plans are worth a close eye. This is not financial advice. If you want to stay ahead of the market's twists and turns, subscribe to our channel and catch our daily shorts.